Fed-BOJ rate gap. Did the US jobs shock change the yen trade?
My view, it weakens the dollar case, but does not settle the yen trade.
What is the short answer for a US investor?
The jobs shock matters, but the Fed-BOJ rate gap is still wide.
Start with the shock. What did the jobs report actually say?
US non-farm payrolls fell by 23,000 in July.
A negative payroll month sounds recessionary. Is that the call?
No. BLS also said payrolls and unemployment changed little.
Then why did markets care so much about minus 23,000?
It was 57,000 lower than the prior 12-month monthly average.
How do you get that 57,000 comparison?
Compare minus 23,000 with the earlier average gain of 34,000.
So the gap from the average is larger than the headline loss.
Exactly. Think of it like speed dropping below zero from a slow cruise.
Was July the only weak part of the release?
No. May and June were revised down by 103,000 combined.
How large is 103,000 versus what was first reported?
It erased about 55.4% of the original May-June gains.
Walk me through that without finance jargon.
In short, 186,000 reported jobs became 83,000 after revisions.
That sounds broader than one noisy month.
Yes, and participation is 0.7 point lower than in January.
But unemployment stayed at 4.1%. Is that the counter signal?
Correct. It is weakness, not proof of a deep contraction.
Now connect this to the Federal Reserve.
On July 29, the Fed held its range at 3.50% to 3.75%.
Did the Fed already sound worried about jobs?
No. Its statement said job gains had kept pace with the workforce.
So the new report challenges that description.
It does, but the Fed also said inflation remains elevated.
That means a rate cut is not automatic.
Right. 3 voters even preferred a quarter-point increase.
Where is the Bank of Japan in this comparison?
The Fed midpoint is 2.625 percentage points above the BOJ rate.
Wait, what rates are you matching to get 2.625 points?
A 3.625% Fed midpoint versus the BOJ's 1.0% overnight target.
In plain English, why does that gap matter for the yen?
Put simply, dollar cash can still earn more than yen cash.
So weak jobs pull one way, while the rate gap pulls the other.
Exactly. That tension is the whole yen trade today.
Was the BOJ unanimous at 1.0%?
No. One member preferred 1.25%, signaling an upside rate risk.
That sounds yen positive if the BOJ eventually follows.
Yes, but one dissent is not a promised policy move.
What did the yen do around those policy decisions?
It strengthened about 2.87% versus the dollar in 2 days.
Show me the official numbers behind that move.
Dollar yen fell from 163.86 on July 29 to 159.16 on July 31.
Lower dollar yen means each dollar buys fewer yen, correct?
Correct. That is yen strength, before the August 7th jobs report.
So we should not pretend that move was caused by the jobs data.
Here's the key. It shows how sensitive the currency already was.
Why should an American stock investor care about this currency?
It changes translated returns and Japanese exporters' dollar revenue.
Is the yen also a US policy issue, not just a market issue?
Yes. Treasury kept Japan on its currency monitoring list.
What scale puts Japan on Washington's radar?
Its U.S. trade surplus was 3.67 times Treasury's threshold.
That is $55 billion versus a $15 billion threshold?
Yes, using goods and services over the report's trailing year.
Did Treasury accuse Japan of manipulating the yen?
No, it said no major partner met all 3 enhanced tests.
Then what is the strongest counterpoint to your cautious view?
But revisions and falling participation make the weakness broader.
Meaning one report may contain more signal than usual?
Yes, a Fed cut could narrow the gap faster than markets expect.
Which Japanese assets react differently to a stronger yen?
Exporters lose translation help. Importers get cost relief.
And Japanese banks?
My view, banks need BOJ hikes, not merely a weaker U.S. report.
So does the payroll shock make Japan stocks a simple buy?
No, this is scenario analysis, not investment advice.
What should U.S. investors watch next?
Watch payroll revisions, U.S. inflation, and the next BOJ guidance.
Give me a clear condition that would change your view.
If the policy gap falls below 2 points, I would change my view.
What would probably create that sub 2-point gap?
Fed cuts while the BOJ holds or raises its 1.0% rate.
And what would invalidate the stronger yen case?
Hot inflation, a Fed hold, and no further BOJ tightening.
Put the whole argument into one sentence.
Jobs cracked. but the 2.625-point rate gap still anchors the trade.
So the next data decide whether this is noise or a regime shift.
Exactly. Follow the gap, not one dramatic headline.